There was an article that was placed earlier this morning talking about the stock market possibly being in a bubble. They used the phrase that I believe it was Alan Greenspan used years ago, and right after Greenspan used that term, the market sold off. But they're basically saying that Barclays has an internal system that they use to determine if stocks are overbought, and they're saying that right now we're in that place, that the market is really getting to a place where it's got beyond the fundamentals. Today we want to talk about why this is probably incorrect. Over the last 35 years, I've been managing money, and typically what I've seen over this time period is before a market corrects, usually it will hit a high. Then what it will do for several weeks after that, it will go in and try that high. And when it cannot get the momentum, sometimes what happens is the momentum shifts south and the market starts selling off. But we're nowhere close to that right now. And Grayson, give me some of your thoughts on this article that was written today.
Yeah, I remember when I was getting started in this business and when I was studying finance over at Georgia Southern, and you'd read through articles in the Wall Street Journal and on Yahoo Finance, and they would all talk about different things, and one of them would say that the market's going to correct, and then the other one would say that we've got bull run days ahead of us, and it's just hard to know who to believe, especially if you don't have the ability to do your own research and if you're not paying attention to what the facts are. And one of the interesting things about this one in particular is it just reminds me of back when I used to think like that, and you don't know, should I be getting out of the market because this is what Barclays is saying, or is this just some of the noise that is out every day and people are just trying to gain market share and put out content?
Grayson, I believe you're on to something. I believe that's exactly what this is. It's noise. I think a lot of these writers have to produce content, so they find out about Barclays' internal program that figures how much people are buying, selling in the market, and it looks like the Barclays, their new system, that it is being overbought, and so they write up an article saying about the exuberance of the market and it possibly could be headed for a downfall. But I think it's really nothing more than noise. And you know, the smart investor is going to be able to put in earplugs and basically do away with the noise. And I think this is what we're dealing with right now. You know, if you go and look at the 33 sectors that make up the stock market, you'll find out that right now the top performing industry group is, lo and behold, mining. You know, mining's up over 41%. And you would have thought maybe that the Magnificent Seven, technology, was leading the way, but it's actually mining and mining stocks. Grayson, what do you have listed down at number 2?
Alcohol and tobacco are actually number 2. They're up 26% on the year. That's pretty crazy. It's outperforming the market by really about 4 times.
Yeah, that is absolutely ridiculous. You know, we screen out tobacco companies, and it's been a very long time since I've seen tobacco and alcohol leading. Usually in the past, in the late 80s, early 90s, you had Philip Morris, you had some of those R.J. Reynolds, some of those that were leading the market, but it's been a very long time. But, you know, you probably have to get all the way down to number 5 or number 6 on the list before you actually get into technology stocks. But what is interesting, there are some AI companies that are doing very well. There is some quantum computing stocks that are doing very well. But on the most part, if you look at the average return of those 33 sectors since January 1st, they've averaged 6.14%. The median return for those sectors is just a little bit better than 4%. Grayson, what do you think there is some reasons that we doubt? Share with the people why we doubt there is there rational exuberance right now in the market.
Number one, it doesn't really mean anything that people are excited and looking forward to what the future has in store for the stock market. When things start getting bubbly, that's when you start seeing real irrational behavior, like when the old lady at the grocery store is telling you how easy investing is and how you need to buy this, or the guy that's shining your shoes is telling you what stocks to buy, kind of like a JD Morgan used to say. That's kind of what you have to look out for. Right now, people are just coming out of a pullback in the market. They're coming out of a lot of worries about tariffs and international tensions, and they're rightfully, I think, happy about what's going on, and they're looking forward to a good rest of the year. And that doesn't necessarily mean that we have to be contrarians and say that they're wrong and that everything's going to pot.
Well, just because you're having strength in the market, it could be based on good earnings, doesn't mean it's irrational. It just means there's companies out there that are doing well, and it causes the market to be strong. Historically, these market sentiments haven't been a real good gauge on the direction of the markets. So really, I believe you can take this with a grain of salt. I believe it's nothing more than noise. Grayson, is there anything else you think our viewers need to know before we finish this video?
Well, we could certainly talk about a lot more, but I think that should cover our topic for today. Until next time, may God richly bless you.